Let's talk about IRS Form Schedule F, line by line instructions. Farming profit and loss. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about Schedule F, farming profit and loss. And really, farming is a complicated business, and navigating tax laws only makes it more complex, right? Now, fortunately, there is an IRS form, an IRS publication rather, Publication 225, which has a lot of info about keeping tax records, accounting for farm income and expenses, and how the tax laws apply to farm operations. So right now, I'm putting on the screen right now a snapshot of the Publication 225. This is Farmer's Tax Guide, along with the link to to the IRS website. So this is a document that helps individuals involved in agribusiness navigate the farming specific tax code, and it details and outlines how the federal government taxes farms. So individuals will be liable for taxes if the farm is operated for profit, whether the taxpayer owns the farm or is a tenant. All right, very important. And on Publication 225, you can also find the different accounting methods that farmers may use for running their operations and how farmers must report farm income. And along with Publication 225, the IRS also has Publication 51, and we're showing this to you right now on the screen. And Publication 51 is a document specific to the employers of agricultural workers. It provides guidance on how individuals who employ workers in the agribusiness must comply with tax withholdings. And sometimes the U.S. Department of Labor requires employers to register with them, and also does not allow employers to label farm employees as independent contractors. So basically, what I'm trying to say here is if you are a farmer and your farming business is a sole proprietorship, you must file Schedule F, profit or loss from farming, to report your agricultural business's net profit or loss for the year. And livestock, dairy, poultry, fish, and fruit farmers, as well as owners, operators of plantations, ranches, nurseries, or orchards, are considered farmers for the purposes of Schedule F. All right, so your farming profit and loss is then transferred to a Form 1040 for computing your tax liability. And Schedule F is for farmers what Schedule C is to other sole proprietors. Okay, so one thing I also want to say here is that farming isn't just about managing crops and livestock, right? Like any other businesses, it involves paying federal income tax. So farms that operate as a sole proprietor, trust, partnership, limited liability company, and S corporation, you got to use this form as Schedule F, and you want to use it to report your earnings, your farming income, and expenses. So now that you kind of have an idea, let me just dig a little deeper here. Let's have an in-depth conversation about Schedule F. Now, Schedule F is the Internal Revenue Service form used to report money earned from selling crops and livestock, breeding fish, operating a ranch, nursery, or sod farm, crop insurance payouts, federal disaster payouts, money earned from a farming cooperative, that's Form 1099 PATR, payments received from an agricultural program, pasture income received from taking care of someone else's livestock. So if you receive rental income from farmland that is not based on the production of the tenant, you should report income on Schedule E instead, not F. Only farms structured as sole proprietorships, trusts, partnerships, LLCs, or S corporations should use Schedule F. And farming businesses structured as a C corporation file and pay taxes with Form 1120. And Schedule F is used specifically for certain things. So Schedule F asks about your principal farming activity or crop. your income from selling livestock, produce, grains, or other products, and whether you received farm income from cooperative distributions, agricultural program payments, commodity credit corporation loan, the triple C loans, crop insurance proceeds, federal crop disaster payments, or any other sources. And Schedule F provides different ways to account for your income depending on whether you use the cash or accrual method. And you also need to fill out Schedule F to claim tax deductions for your farming business, which will ultimately, right, and because that's the goal, which will lower your tax bill. And deductions you may be able to claim include, but are not limited to, things like the expenses you paid for a business vehicle, chemicals, conservation, custom hire, depreciation, employee benefits, feed, fertilizers, freight and trucking, gasoline and other fuel, insurance, interest, hired labor, pension, and profit sharing plans, repairs and maintenance. Okay, seeds and plants, those you can deduct those, storage and warehousing, supplies, taxes, utilities, veterinary fees, and rent or lease fees for vehicles, machinery, equipment, and land, and the like. Really depends. So you can cover the whole gamut. Now, to use Schedule F to file taxes, there are a few things you have to. There are a few criteria you have to actually meet. Whether you should file Schedule F with your tax return depends on three factors. You must be a farmer. Your farm is a business, or you are a sole proprietor. So you must be a farmer. Qualifying as a farmer doesn't just mean that you grow crops. So the definition of farmer used by the government includes ranchers, fish breeders, and homeowners who do things like keep chickens and earn income from selling their eggs. So a farmer is anyone who pursues or receives income from cultivating crops and or livestock, whether it's on a farm, range, or in an orchard. Okay, and farmers don't include vets, pet kennels, wineries, or landscaping businesses, but nurseries that grow ornamental plants are considered to be farmers for tax purposes. Your farm is a business, so farming as a business is differentiated from farming as a hobby for tax purposes. So only farmers who operate as businesses are required to file Schedule F. So you must be engaged in farming for profit to be considered a business. This means what? It means that you have made money in at least 3 of the last 5 years, or 2 out of 7 years for breeding or raising horses. And the IRS will consider other factors if you don't strictly meet this requirement. All right, let me give you an example. If you operate your farm like a business, you make changes in an attempt to improve profitability, farming is your main source of income, the time and effort you put into farming are substantial, losses are either beyond your control or normal in the startup phase of farming, you have made a profit from similar activities in the past, you expect to make a profit in the future from the appreciation of assets used in farming. If you meet those requirements, then the IRS takes you seriously, believes that, okay, you are in business and this is not a hobby, and you are a sole proprietor. Schedule F is only used by farmers who are considered to be sole proprietors. Those who operate their farming business through a corporation or other business entity would report their incomes and expenses on Form 1120 instead. You must file Form 1065 if you are instead. You must file Form 1065 instead. If you are married, you and your spouse own and operate your farm together as an unincorporated business, and you share jointly in the profits. You and your spouse would only file Schedule F if only one or two situation applies. Only one or two. You and your spouse wholly own your unincorporated business, your unincorporated farming business as a community property. You can then be treated as a sole proprietorship instead of a partnership and file Schedule F. That's the first scenario. And or you and your spouse each materially participate as the only members of a jointly owned and operated farm, file a joint return for the tax year, and elect to be treated as a qualified joint venture. You would then each file a separate Schedule F. So how do you really report farming income on Schedule F? The thing is that most businesses must decide whether they want to operate and report their incomes on a cash or accrual basis. But farmers have a third option, and this is a specific option that is only exclusive, if you will, to farmers. They can use the crop method of accounting instead. So income is reportable in the year you actually receive it with the cash method of accounting. Income is reported in the year it was earned with the accrual method of accounting. And the crop method of accounting allows you to include revenues in your income in the year you sell what you've grown. So you must receive special permission from the IRS to use the crop method of accounting. So you must use the cash method for reporting your expenses if you use the cash method for calculating your income. Similarly, you must use the accrual method for reporting your expenses if you use the accrual method for calculating your income. And in addition, you must report income from other sources in addition to your farming income on your Schedule F, such as federal disaster payments and money received from agricultural programs. Now, the thing we have seen based on our research is that most agricultural programs will report income paid to you on Form 1099-G, a copy of which will be mailed to you. What I want to say here is that if you want to use the crop method of accounting, you need to receive special permission. In other words, you need to receive the permission in writing. You need to request this. It's just a simple letter that you have to you send it to the IRS, or you can actually mention that when you file your tax return. And you have to, in this case, you have to either mail the tax return or fax it. And you can basically request the qualification to be made, so you start using the crop method. And one thing that's also very important is that once you are granted an exclusive authorization to use the crop method, for you to change it, you have to request another permission. You can't just be like, okay, this year I'm using the crop method of accounting, and next year I feel like using the cash method, and the following year I feel like using the accrual method. No, there has to be consistency. The IRS loves consistency. So once you have been granted a permission when it comes to your accounting method, you need to stick to it, or change it if something happens, but you have to request another permission. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about IRS Form Schedule F line by line instructions. And I've spoken to you about income on farming income on Schedule F. Let's now talk about deductible expenses on Schedule F. So as with most other businesses, the deductible costs and expenses of doing business must be ordinary and necessary. Very important. So if you meet those two criteria, then you can claim the expenses on Schedule F. This means that virtually all farmers claim the same costs and expenses, and in fact, you would find it difficult or impossible to make a living without paying them. So you want to reduce an expense by the amount of any reimbursement if you are reimbursed for any expenses in the year you claim them. You will report the reimbursement as income if you are reimbursed in the following year. All right, and expenses are deductible in the year you pay them if you choose the cash basis, or in the year you incur them if you use the accrual method. And how do you report capital gains or losses? Schedule F cannot be used, and I repeat it cannot be used to report gains or losses associated with the sale or disposition of certain farm assets. And this includes your buildings or structures, most livestock, land, and farm equipment. You would instead report those gains or losses on Form 4797, Sale of Business Property. And we have an entire show in the works for that form. All right, and what are the rules for estimated tax payments when it comes to farmers? Now, the thing here is that farmers need only make one estimated tax payment per year under certain circumstances, rather than the 4 that other sole proprietors are required to make. And IRS penalties won't kick in if you make just one payment, but there are rules, and you will qualify to make just one estimated payment by January 15th of the following year. This is your estimated payment for 2020 will be due by January 15th, 2021, and the same will be due for 2021 will be due by January 15, 2022, right? And that's if you're a calendar year taxpayer and more than 2/3 of your income comes from farming in either the current or previous year. One thing that's very important to know is that you don't have to make estimated payments if you pay all the tax you owe when you file Form 1040 by March 2nd if you are a calendar year taxpayer. And there are, speaking about Form Schedule F, a lot of farmers have questions, a lot of other questions that we have gathered, and we want to sort of cover them here. There are special considerations when filing Schedule F. So you have farm income. This is an important point to cover, and payments made to third parties. So as a farmer, you really want to pay attention to farm income. So in U.S. agricultural policy, farm income can be divided in five categories. So whenever you hear the term farm income, it can mean five different things. So you have gross cash income. This is basically the sum of all receipts from the sale of crops, livestock, and farm-related goods and services, as well as any direct payments from the government. So those, you will put them as gross cash income. Number two, you have gross farm income. This is the same as gross cash income with the addition of non-money income, such as, let's say, the value of home consumption of self-produced food. Number three, you have net cash income. So the gross cash income less all cash expenses, such as for feed, seed, fertilizer, property taxes, interest on debt, wages, contract labor, and rents to non-operator landlords. Number four, you have net farm income. So this equals the gross farm income less cash expenses and non-cash expenses, such as capital consumption and farm household expenses. And finally, number five, you have the net cash income. This is a short-term measure of cash flow. So when it comes to liquidity analysis for farmers, net cash income is really used for analysis of liquidity over 3 months or less, or maybe 6 months or less, depending, and in some cases 1 year or less, but it's very short term. What about payments made to third parties? Now, Schedule F also asks if you made any payment during the tax year that required you to file Form 1099, and if you have filed it. And an example of a case where you would need to file Form 1099 is if you hired an independent, let's say you hired an independent contractor to perform more than $600 worth of work, such as transporting your produce to a weekly farmer's market for your farm business or for something else. Then in this case, you need to actually send a Form 1099 to that person. It could be a 1099 miscellaneous or a 1099 NEC, NEC. It really depends on your situation. So I really want to talk to you now about how to calculate. How do you calculate how do you complete the Schedule F tax form? Now, Schedule F really includes several parts. So you should complete part 1 if you use the cash method of accounting. You can skip ahead to part 3 if you use the accrual method, reserved specifically for farmers. And part 2 is for deductible expenses, and it includes more than 30 expenses, including insurance, utilities, employee benefits programs, fertilizers, seeds, and plants. And the cost of things you have purchased for resale are included here as well. And the cool thing here is that Schedule F can be filed with Form 1040, 1040 NR, that's for non-resident aliens, 1040 SR for senior citizens, 1041, 1065, 1065B. All right, Forms 1040A and 1040 Easy are actually they no longer exist. All right, so the key to really preparing an accurate Schedule F1 is to keep excellent records of your income, assets, crops, livestock, other assets, and various expenses throughout the year. And you can do this electronically, or you can do it manually by just having the right paperwork. Very important. And farmers should ideally use some type of accounting software to streamline the process at tax time. So you will need the many advanced features offered by this program, such as for entering assets, tracking depreciation, accurately calculating your net profit or loss, and averaging your farming income using Schedule 1. All right. And the thing here is that we've seen in our research that this advanced calculations that I just talked about cannot be handled by a lower end tax software. So you want to choose a robust program that is designed for business owners who are farmers. All right. So the first section of Schedule F asks for some basic information about the farming operation. All right. So you can actually see it here. So we have so you have the owner name, and so we're showing this to you right now. You can see it. Okay, so the Schedule F, we're showing it on the screen. So the first section, you put the owner name and social security number, the principal crop of activity and code. You can find this on page 2 of Schedule F. The accounting method, so small farms earning less than $1 million per year may use the cash method of accounting. Larger farm operations must use the accrual method. And the identification number for the business, the employer identification number, the EIN, if different from the owner's SSN, right? So, and also we have here whether you materially participated in the business. So generally, you materially participate in the business if you spend more than 500 hours working in the business during the year. And if you are an investor in the business but don't work on it, the IRS considers the farm as passive activity, and you may not be able to use losses from the farm to offset other income. And this is very important. And you also need to specify whether the business must file any 1099 forms, and if so, whether it will issue them. All right, so basically, I'm showing you again. We're still on the form. The form is still on the screen, as you can see here. And now let's talk about Part 1. Part 1. So the Part 1 of Schedule F is where you report farming income earned during the tax year. All right, very important. So if you use the cash method of accounting, lines 1 through 7 provide space for entering different types of income income that farms typically receive, such as income from sales of livestock and produce, cooperative distribution. This line 3A, as you can see here. You have agricultural program payments, that's 4A, and crop insurance proceeds on distribution here. Crop insurance proceeds on 6. And on 5A, you have the CCC loans reported under election. So you have the CCC, the 5A, you have Commodity Credit Corporation loans and the loans that were forfeited. So you have to, for each category, you have to put for 5A and 5B rather, you have to put the taxable amount in 5C. And one thing I also want to say here is that if you receive farming income from other sources that don't fit within the predefined categories, you want to enter it on line 8. So line 8 says other income, including federal and state gasoline and fuel tax credit or refund. Then you want to enter your total income on line 9. If you use the accrual method, don't enter income details on line 1 through 8. Instead, you want to calculate farming income in Part 3, and you want to enter the results on line 9 of Part 1. One thing I also want to say is that if you have some custom hire machine work income, you want to put it here. And this basically is the kind of scenario if you were hired as a sole proprietor, or in other words, as a contractor, as a sole proprietor, or as EIC, as a company working for another farm business. And in this case, you have to either get a 1099 miscellaneous or 1099 NEC from that farm, but you still have to put it here. So custom hire income. Okay, so once you do this, you just add everything from lines 1C all the way to line 8, and you just put it in line 9. So Part 2, let's talk about Part 2. So Part 2 is there. So Part 2, this is farm expenses, cash and accrual method. And you, please do not include personal or living expenses here. All right, so this is the Part 2 is for entering deductible farm expenses. So as with the income section, there are several lines for entering common types of farming expenses, such as car and truck expenses. This is 10. 11, you have chemicals. 12, you have conservation expenses. 13, you have a custom hire machine work. So machine work, of course, you have the income, or you also have to put the expenses portion of the activity. Number 14, you have depreciation and section 179 expense. Line 15, you have employee benefits programs other than on line 23. 16, you have feed. 17, you have fertilizers and lime. 18, you have freight and trucking. 19, you have gasoline, fuel, and oil. Line 20, you have insurance other than health. We'll cover the health insurance on another category, but here it's insurance for the farm. Line 21, you have interest. So you have a mortgage interest paid to bank, for example, and other. 22, you have a labor hired less employment credits. So if you have workers working on the farm for you. And line 23, you have pension and profit sharing plans. Line 24, you have rent or lease. So this here applies to vehicles, machinery, equipment, or other. It can be land, animals. Line 25, you have repairs and maintenance. Line 26, you have seeds and plants. 27, you have to enter the amount for storage and warehousing. Very important. 28, you have supplies. And here we talk about all kinds of supplies. All kinds of supplies, not just the regular supplies that you feed your animal, that you feed to your animal, but it also depends on the fertilizer, the supplies that allow you to just maintain the farm. 29, you have taxes, all kinds of taxes that you paid at the local, at the county level, at the municipal level. 30, utilities, including internet connection. 31, you have veterinary. I get it. Vet services, breeding and medicine. And 32, you have other expenses. So basically, the thing is that you have to specify everything else that you haven't put in line 10 to 32. All right. And you can enter any business expenses that don't fit into the lines provided on line 32 through 32F. So you want to enter your total cost on line 33, then you want to deduct total expenses from total income, and you want to enter your net farm profit or loss on line 34. What about part 3? So part 3, it's farm income accrual method. So one thing I want to say here is that only farms that use the accrual basis of accounting need to complete part 3, which is basically the section used to calculate farming income using the accrual method. So line 37 through 42 provides space for entering some common sources of farming income. And if you have any income that doesn't fit into one of the predefined categories, you want to enter it on line 43, then you want to enter the total income on line 44. All right. And so we have a line 37, we have sales of livestock, produce, grains, and other products. This is basically if you use the accrual method. Line 38A, you have cooperative distributions. And 39A, you have agricultural payments. And 40, you have the CCC loans, so the Commodity Credit Corporation loans. And on A, you want to put the amount. On line 40B, you have to put the CC loans forfeited. 41, line 41, you have crop insurance proceeds. 42, you have custom hired machine work. So basically, the expenses are kind of similar. The only difference is that here we have the accrual method as opposed to the cash method. Line 43, you have other income. 44, you on line 44, you just have to add amount in the right column for line 37, all the way through 43. Line 45, inventory of livestock, produce, grains, and other products at the beginning of the year. So don't include sales reported on Form 4797. I think I already spoke about that. All right. And one thing I want to say here is that for lines 47, you want to add 46 and 45. All right. And remember that those inventory amounts that you put on line 46, line 47, inventory of livestock, produce, grains, and other products at the end of the year. This actually, you use those amounts to calculate your cost of goods sold, and your cost of goods sold will be going on line 49. So to calculate cost of goods sold, you take your inventory on line 48 at the end of the year, and you subtract from it the inventory at the beginning of the year. That's what's on line 47. And basically on line 50, you put the gross income, you calculate it, so you want to subtract line 49 from line 44. And then you want to carry the results to line 9 in part 1. So basically, your gross income is line 49, which is the cost of livestock, produce, income, produce, grains, and other products sold. That you have to minus it. You have to subtract it from line 44, which is basically all the sources of farm income that you generated during the year. So this is pretty much it. And I want to talk about Schedule F Part 4. This is kind of important, and a lot of people have been asking about this in our research. And Part 4 is it just sort of is a collection of the principal agricultural activity quotes. And this is very important. Do not file Schedule F Form 1040 to report the following: income from providing agricultural services such as soil preparation, veterinary, farm labor, horticultural, or management for a fee or on a contract basis. Instead, you want to file Schedule C, Form 1040. That's the first instruction. Second, the income from breeding, raising, or caring for dogs, cats, or other pet animals, you don't report that on Schedule F. Instead, you want to file Schedule C, Form 1040. And don't report sales of livestock held for draft, breeding, sports, or dairy purposes. Instead, you want to use Form 4797. And this is very important because the codes I'm giving you here, the principal agricultural activity codes, they classify farms by their primary activity to facilitate the administration of the Internal Revenue Code. And so these 6-digit codes are based on the North American Industry Classification System, the NAICS. So you need to select the code that best identifies your primary farming activity and enter the 6-digit number on line B. Okay, so we have the first one, we have oilseed and grain farming. We have vegetable and melon farming, fruit and tree nut farming, greenhouse, nursery, and floriculture production, other crop farming. This is for crop production. And then you have the animal production. So you have beef, cattle, ranching, and farming, cattle feedlots, dairy, cattle, and milk production, hog and pig farming, poultry and egg production, sheep and goat farming, aquaculture, other animal production. And the third category, you have forestry and logging. So you have 113000. This is forestry and logging, including forest nurseries and timber tracts. So this is kind of important to understand because then you want the IRS to categorize your return, your Schedule F, the proper way, and so that if there are any questions about your return, they can be answered properly and quickly. I'll be right back, but after this, don't go anywhere. Welcome back, folks, to another, the final session of this show, and I want to talk to you about other IRS tax forms for farmers. So basically, besides Schedule F, there are other forms that a farmer needs to know about. Because, Schedule F is not the only form you may need to file your farming operations taxes. So we have Schedule F, Schedule J. So farming businesses can have good years and bad years. So rather than pay high tax rates in the good years and low tax rates in the bad years, the IRS allows farmers to average their income over the previous 3 years. So to take advantage of averaging, you need to complete IRS Schedule J. Okay, and then you have Form 4835. So if you receive a rental income from a farm that is based on production, you need to file Form 4835. So this form looks very similar to Part 1 and 2 of Schedule F, and instructions for completing it are included with the form. So you need to attach Form 4835 to your Form 1040 or Form 1040 NR non-resident. Next, we have Form 8995 or 8995A. So the Tax Cuts and Jobs Act of 2017 created a new qualified business income, the QBI deduction, for business owners, including farmers. And this deduction gives business owners a deduction worth up to 20% of their business income. And you use either Form 8995 or Form 8995A to calculate the QBI deduction. And Form 8995 is basically the simplest version, and you can use it if all of the following are true. So you have qualified business income. Your taxable income before the QBI deduction is less than or equal to $163,300 if your filing status is single, head of household, or qualifying widow or widower. $316,000 if your filing status is married filing jointly. And the third criterion here is that you're not a patron in a specific agricultural or horticultural cooperative. So besides Schedule J, Form 4835, and Form 8995 or 8995A, you also have Schedule SE. So in the eyes of the IRS, farmers are self-employed, so you must pay self-employment taxes on your farming profits. And this kind of tax is a self-employed person's version of Social Security and Medicare taxes. So you want to calculate the amount of self-employment taxes you owe using Schedule SC. All right, folks, so basically this is it. So the key takeaways here are that the IRS Schedule F, you use it to report taxable income earned from farming or agricultural activities. This is the bottom line. Okay, and this is the kind of schedule you want to include on Form 1040, regardless of the type of farm income and whether it's a primary business activity or not. And Schedule F also allows for various farm-related credits and deductions. Okay, so this is it for today's conversation. I really appreciated it. I just want to quickly recap. So I spoke to you about what Schedule F is, what is Schedule F used specifically for, who uses Schedule F to file taxes, how do you report farming income on Schedule F, what are deductible expenses on Schedule F, how do you report capital gains and losses, what are the rules for estimated tax payments, what are special considerations for filing Schedule F, how do you complete the Schedule F tax form, and what are other IRS tax forms for farmers. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.